Everybody, welcome to the big, special, fancy, fun webinar that we're doing here with our friends at the CMT Association. I'm your host, Chicago Sean. I'm joined by Michael Nauss from Trade Ideas and Tyler Wood from the CMT Association. Hello, gentlemen. You look great.
Good afternoon.
The cosmos is aligning for our viewers in that they don't have to look at my face on camera because for whatever reason, my computer is not allowing me to share my webcam. But that's for the better. That's for everyone's benefit, I promise. But hey, we're glad you're here. Looks like we have at least over 50 people logged in live. We are going to be recording this, so this will be available for people to watch. We'll share it on YouTube and various channels. So we're glad you're here. And so first things first, we will be taking questions. Let's try to hold questions to the end of the session. You guys can ask questions of Tyler or of Michael, but let's get through the things we want to talk about first. We'll get all that stuff done at the end. And first up, we're going to have Tyler talk, and Tyler's going to introduce you guys to the CMT Association. And for those of you who want to take your technical analysis to the next level, and help boost your career opportunities, well, the CMT Association has a path for you. Michael, my friend Michael from Trade Ideas, went down their path, and he's going to tell you about his journey after Tyler talks. But Tyler, I'm going to pass it over to you, and let's hear what you got to say, my friend.
Sure thing, buddy. Thank you for that kind introduction. And I'm surprised that none of the three of us showed up in cummerbunds and ascots. I thought we were going suited and booted, but glad to see you all. And Sean, I've been told I have a face for radio for many years now, my wife and child included. So maybe it's best for people to just focus on the charts. My name is Tyler Wood. I'm the managing director for the CMT Association. And so instead of just introducing myself, I thought I'd introduce you guys to what the CMT Association is, how we got started, give you just a little bit of background. So it's about a 50-year-old startup is what I like to call it. Started as a very small club in New York. Sell-side equity research analysts quickly expanded to Boston. So it's really the professional institutional money managers of the day who were using these tools to understand what the market was telling them. Technical analysis is not a new discipline, but the CMT Association got started in part because there was a lot of misunderstanding around the industry and how people are using technical tools. You fast forward to today, the organization has grown by leaps and bounds based on the premise that we do two things. We help investors improve their decision making, and we hopefully open career opportunities to folks with that CMT charter. So we're going to talk a little bit more about both concepts today, but we've got members in 137 countries, about 5,000 full members and charter holders, another 8,600. Oh, that says 64. These slides, it never keeps growing. 8,600 candidates in the CMT program. And then there are about another 40,000 or so who just participate in our continuing education. We do a lot in terms of member services to try to keep people at the cutting edge of what is happening in the world of technical analysis. So things like our learning resources, we host a lot of webcasts, individual speakers talking through their process, a lot like what we're going to be doing today. Actually, Michael and David O'Farriot are going to join us on the CMT's webcast platform in June, I believe. And we focus a lot of our energy and activities around publishing the work of great technical analysts, including a new podcast. I got to give myself a little shout out. Dave Lundgren and I have been interviewing some of the best technicians on the street, top money managers. So the newest edition, episode 5, just came out this morning. Encourage you all to check that out wherever you listen to your podcasts. Frank Teixeira has a lot of great takeaways in terms of institutional money management. We also hosted a big conference last week covering 4 major asset classes, had some great speakers on cryptos, digital asset expansion, the whole commodity super cycle. We talked to some great oil traders, as well as the equity and fixed income space. That's kind of near and dear to all American investors' hearts. So I thought we would cover 3 things today, if this sounds good. We'll talk about what technical analysis is, how we define it at the CMT Association, talk a little bit about those tools to improve decision making, and then I'm going to turn it over to you, Mike, and we'll talk through a bit more about relative strength, about the things that you have developed for TI. And then if we've got time at the end, we'll wrap it up, talk a little bit more about, for those of you who are interested, some of those career opportunities that you might be able to pursue for taking your trading to the next level, maybe bringing on some client money, maybe becoming an educator, maybe stepping into a role like Sean and Michael advising others. All right, so let's dive right in. What the heck is technical analysis? Obviously, a chart explains it all. Edwards and McGee. This was the original Bible of technical analysis, and what they were talking about is the study of the action of the market itself. So there's a lot of really rich data that comes out of market activity, and what we're trying to understand is what is happening with the behavior of the investor public. We're looking at price action, we're looking at volume, we're looking at a lot of market internals, and those help us understand supply and demand relationships for any asset class across any time frame. You'll also hear a lot of folks talking about a systematic approach to the market. So algo trading, high frequency, systematic work, most of that is based on technical analysis. And I know, Mike, you've got a few things to share as well, coming from the world of algo trading and then going back into maybe a more rudimentary field of study on things like point and figure or cycles. And the program is really there to help people understand just how broad the field of technical analysis can be. There's a very large body of knowledge. We test a very small subset on the actual exams, but hopefully it's inspiration for a lifetime of study. So it's not a one-size-fits-all approach, but as any technician will tell you, a chart will help explain things a lot better than any set of words. So this comes from Ralph Akampora, one of the co-founders of the association, and a really great educator. He taught everybody on the street at the New York Institute of Finance for years. So some of you may have even seen this. Ralph used to use IBM as sort of the mega cap stock of the day, but let's take a look at Apple. So if you think about one half of the equation being the company, there's a lot of information out there about Apple, their PE ratio, the competitors that they have in the space, their management team, whether they're very efficient or inefficient at allocating capital throughout the firm. They might pay a dividend. These are all the fundamental factors, and of course, the products that are going to generate those future cash flows. That's fundamental analysis, understanding the company that you want to invest in. But that is only half of the picture. In fact, for most of us in the public markets, we're trading the stock. We're not buying the whole company, right? We're not private equity investors coming in to snap up the whole thing. So for us, the things that matter are price, the volume at which shares trade at, other market internals like open interest or put call parity. We might be looking at some supply and demand relationships by studying some of those fund flows or the sentiment indicators. And of course, the psychology of the market. How do people feel about growth equities right now? How do they feel about those FANG stocks versus value, banks and energy, right? The psychology plays a big role in supply and demand, which is going to drive price. Now, at the CMT Association, we came up with some really fancy definitions. We believe that technical analysis provides the tools to successfully navigate the gap between intrinsic value and market price across all asset classes and timeframes through a disciplined, systematic approach to market behavior and the law of supply and demand. Now, I got a promotion for that, probably a new job title, because that was such a fancy way to define technical analysis. But really what it came from was this guru of valuation and fundamentals. His name is Professor Aswath Damodaran. He's written many, many books. He's in the CFA curriculum. He lives and breathes discounted cash flow statements. And I'm sure many of you have a sound fundamental basis for why you do a lot of your investing, stock selection. But in his blog writings, he was really annoyed by the fact that the market is wrong so often, right? Why are prices elevated way above or depressed way below intrinsic value? Why is the market so often wrong? And this is going to play into these tools that we're going to use to help us outperform the market over time. Those drivers of price that Aswath Damodaran was aware of, it's really the whole field of technical analysis. The moods and momentum towards different stocks, the supply and demand relationships, how people react sentiment-wise to surface stories about the fundamentals, right? And I got to take everybody back to Econ 101 for just a second, right? The supply and demand relationship is critical. It's foundational to everything behind technical analysis, so that at a fixed level of supply, if you increase demand, if you move up that supply curve, you naturally have an increase in price. And that is the foundational basis for almost every bit of study under the technical analysis umbrella, trying to understand what is driving supply and demand, which of course drives price. Now, there are only 4 outcomes, right? Everybody's learned this lesson before. You can take a really big loss. You can take a really big gain. You can take a small gain or a small loss. Now, we're fine with all 3 of those. We just have to avoid those major losses, right? George Soros, we've heard Paul Tudor Jones, we've heard a lot of really phenomenal traders and investors talk about the fact that it doesn't matter how often they're right. In fact, they can be wrong very frequently, but with a sound risk management discipline, they can avoid those large losses. And when their gains far supersede, when they outperform the size of their losses, over time, they will make money. All right. We've got some math behind risk management. We've got a lot of folks within the CMT program and CMT charter holders around the world who use what's called a trend following approach. It's not the only approach to investing or trading the markets. A lot of great work on mean reversion was developed in the 1970s when we had this strong range bound market, and you can use technical analysis over any time frame. So for a lot of people, they're trying to capture that reversion to the mean or reversion beyond the mean, as is often the case. But let's stick with trend following just for the purposes of this conversation for the next few minutes. All right. Now, if we can let our profits run and cut our losers short, we outperform over time, even if we are buying more losers than winners. Right. So this chart is just showing you a little bit of that math. We want a positive skew on our P&L, and you've got some great investors, experts in the field, the legends of finance who have said this lesson over and over and over again. Why does it get repeated so often? Because while it is simple, it is not that easy. David Ricardo, maybe the first to write that down. Bernard Baruch says, if you have made a mistake, cut your losses as quickly as possible. We could talk to the turtle traders, Jerry Parker, who talks about loving his losers, right? Like really digging into the system to make sure that you can identify, find something that is not working as fast as possible. You hear from a lot of technical analysts. All right, so here's my whole thesis. I think there's a higher probability this is going higher. The path of least resistance is higher, but here's how I'll know when I'm wrong. And I want to know when I'm wrong as quickly as possible. I want to embrace that, and I want to close the position. Unfortunately, we are all hardwired to really hate to recognize loss. Right, prospect theory, we could talk all day about Daniel Kahneman and Amos Tversky and why that is, the evolution of our human brains that makes us really want to lock in a profit, right? This happens for institutional traders too. I'm not talking about, their smart money and other money, not at all. This is human nature that we would want to lock in a profit, and therefore we cut our winners too short. And we don't want to accept the truth of a bad trade. So we just, average down, oh, well, that was a trade, but now it's an investment. I'm going to hold on to it for a little while and see if I can get back to break even. It's natural. It's okay. But technical analysis is going to help you objectify, take some of the emotion out of that, and develop a process. All right, so let's talk about the happy part, right? The concept of momentum has been proven out in tons of research. The literature shows us, and people have backtested simple momentum factors over and over and over again. So if we're just looking at stocks with the best 12-month momentum going forward, that's your top blue line on this chart in front of us. You want to fish where the fish are, right? Trending stocks tend to trend higher. And that also has a root in human behavior. We talk about the herding principle in the CMT curriculum. You're going to learn a lot about these cognitive biases because they actually play out in the market. You can take advantage of them, and we're also all victims of our own hardwiring. But if we know that trend following works, that if we just bought those securities with the highest 12-month momentum, why doesn't everybody do it, right? It's actually really difficult to develop a systematic process, a rules-based approach that's going to allow you to glide with those trends and then stop you out on anything that falls off, all right? So I'm going to tell you a story. This comes from Dave Keller, who is the managing director of research at Fidelity. Maybe you've heard of it. Pretty large mutual fund shop, and he and a huge team of technical analysts advise all of the portfolio managers throughout the firm. Dave was also an amateur pilot when he first moved up to Boston, and he talked about learning to fly a plane. You spend a lot of time on the ground before you ever get up in the air, but once you're in the air, one of the things that the flight instructor does is he'll just kill the engine, or she will just kill the engine, and you are forced to deal with that feeling of the engine's cut out, it goes silent, and the nose dives towards the ground, right? You feel that lurch, that panic starts to set in. And so all of the training, all that time spent on the ground is, what's your checklist? If the engine cut out, maybe it's something as simple as you hit the fuel shutoff valve, right? You just pull that back out and you're back in business. Maybe it's something much more serious, but you need to have a plan for what you're going to do when something goes wrong, when it blows up in your face, right? Mike Tyson says, everybody's got a plan until they get punched in the face. The stock market is not unlike a ring with Mike Tyson. You are trading against some of the best in the business. You are trading against Paul Tudor Jones. So you want to have a plan for when you're wrong. Talking about what the checklist is for flying, well, technical analysis, going through the CMT program, the thing that improves your investment decision making is having a checklist, having a rules-based approach to how you're going to deal with uncertainty in the markets. Now, my checklist is going to be different from yours. My objectives are going to be different from yours. My risk management policies, my appetite for risk is going to be different from yours. So I'm not suggesting that going through the CMT program is learning a trading strategy. Plenty of those folks out there. You hit YouTube the way I do, and you will get ad after ad after ad about learning somebody's trading strategy. That's not what we're talking about. We're talking about a philosophical approach and a process where the inputs are really unique to each individual. I'm going to give you an example. This comes from Dave Lundgren, colleague of Frank Teixeira's at Wellington for over a decade, serious money manager. And he talks about he's never taken a loss that has ended his career. That's why he's still doing what he does. If you have a rules-based approach, you can play with some arrogance. You can press your bets while still having all of these tools in place. So he talks about the inviolable rules of trend following. Obviously, fundamentals are driving these trends. We know that underlying developments for the economy, for individual companies, that is what will drive something higher. That's what gives us those persistent trends. But let's talk about the process of rule following, right? We look for a trend line break, okay? We look for a violation of the last important, swing high or swing low from that prior trend. We're gonna look at a 50-day moving average crossing the 200-day moving average, or any short period crossing below a longer period moving average. We're gonna look at the slope of those moving averages, that when that turns over, that's a real significant point for investors to think about their exit strategy. When all four of his checklist elements were met, that's the sign that there's no more buyers there, right? We've hit overhead resistance. There's no more appetite for this particular stock at this price, and we're not buying. We're getting out. Now, what happens next? Maybe it takes a glide path of a brick and it heads way lower, or maybe not. But you have stopped out to prevent yourself from exposure to that kind of risk. We are not bag holders. Repeat that with me. We do not hold the bag. We follow our rules and we get out no matter what, right? Maybe it comes right back. Maybe that was just a head fake. We got stopped out. No problem. You can get back in. Same thing when we hit the bottom. We're looking at the same checklist for where we want to get back in. We are not bottom fishing. We're waiting for confirmation to get back in and follow that trend. All right. So you can sort of see with me that there is a process. There is a repeatable approach that has been tested, that worked for him, that helped guide his portfolio. It's going to be different for you, maybe, but you need to have those rules in place so that you're not blindly getting into a trade without a plan for how to exit. And the last thing I want to mention, in the sense that this is unique to each investor, we can think about multiple time frames. The same technical tools can be used on a chart that is a 5-minute tick chart or a monthly candle. It doesn't matter. You can look at trends over multiple time frames. But this all comes back from Charlie Dow 130 years ago. This is the founder of the Wall Street Journal, person who put together the Dow Jones Industrial and Transportation Averages, those indices. And what he was observing a long time ago was that investors come into the market in various time frames. So he was a nautical kind of guy, sailed a lot. He talked about that primary trend, the thing that persists for years, if not decades, as the tides of the ocean. Secondary trend, the reaction to some fundamental news, being sort of the waves on the surface of the ocean, and that you can trade in and around the primary trend based on those secondary trends. And then the third time period was the ripples along the water. And these are fleeting. They do not last long. This is not a persistent trend. The reason I want to point this out is that for many of you, you might be trading shorter time periods than, let's say, an institutional mutual fund manager, right? You're not moving the same large pools of capital, and that is just fine. But you can still look at multiple time frames. You might look at a 5-minute, an hourly, and a daily chart to give you a sense of what you are looking at for multiple time frames. Let's switch it over to you, Mike, and talk a little bit about your experience in the program, some of the tools that were most meaningful for you, and then what you've been building since then.
Sure. So yeah, before we go to what I've been building, just again, my experience with the program was coming from someone who had been trading for a long period of time. So 2005, 2006 is when I started trading, and kind of been doing my own thing and working with hedge funds. And I'll go over, I guess, probably a good time to let's do this now. So I'm just gonna quickly, just because we have to, just leave up this disclaimer for just 2 seconds. Again, everything we talk about here is obviously not investment advice. What we're going to talk about is methodologies and everything that we use for trading. I think that's been up there long enough to keep the lawyers happy. So yeah, I'll just leave this up while I introduce myself. Again, I started trading in 2005, been using trade ideas since 2006, worked in the hedge fund space for 10 years. And this is what Tyler was speaking about earlier. I from then became an algorithmic day and swing trader. So using a combination of charting and traditional technical analysis, again, with quantitative metrics and approaches and everything like that. So my path to the CMT may be a little bit different than most, as someone who, spent so much time staring at charts for as long as I have. But a couple things that I really have gained from it and enjoyed about it, even someone with my experience, was the pulling out of your comfort zone slightly. The fact that I was able to look at things and learn things that were in my field of study, but I had never touched. Point and figure charts come to mind. I was a very anti-technical indicator in any respect for the longest time, but seeing them used in certain ways and being taught about certain ways was something that I found of great value. And then also the studying of how other people trade it and other concepts that different people looking at the markets in different ways. And again, that gave the inspiration to what I'm going to talk about now, which is the new product that Trade Ideas came out. So it was very cool. Again, I would recommend anyone doing it regardless of experience. They start you off in such a way that you don't need to be as obsessed with the market as I have been for so long, and you still get a good on-ramp to learning about all of these concepts and topics. But if you're like me and you're someone who is experienced and has been doing it for a length of time, I can say I still found a lot of value from it. Again, simply because as traders, we get stuck in our rut. We look at the market the same way that we've always looked at the market, whether that's the most optimal way to take a look at it or not. So it's always great to say, this is the way I do things, but now I can look at and I can learn certain ways to kind of expand out from there. And all of that is just the learning side of things. There's obviously, Tyler would talk about career paths and things like that. We're going to talk about relative strength and the TI strength alerts that we have built from here. And this is just a concept. I'm not going to spend too much time on the wordies, but I found it from Michael Moody, CMT, just talking about the concept of relative strength, which is essentially just looking at assets that are outperforming other assets. Right? Where is the money flowing into as opposed to where the money is flowing out of? And as Tyler mentioned with his graph of all the momentum and strength names, tons of different studies that you can take a look at and make sure that that this is backed up with science and math and testing. So I'm just going to leave these up here for a second if anyone wants to write them down, if you want to go through some of those studies a little later. But I'm a simple man, so I like to boil things down simply. So what are the benefits of relative strength? Right. So just simply what we're talking about when it comes to relative strength is comparing a instrument to a similar instrument. So a stock to the overall benchmark of the market, or even a stock just relative to itself. So there's just a snapshot I grabbed of Google and Apple. It's kind of very easy to see here that Google, we are outperforming at this time over Apple. So if someone were to want to deploy capital into a market like this, Google and Apple both build operating systems for phones. They're both, mobile producers involved in search and web building and things like that. You could say, from a relative strength point of view, that in this instance, Google has more money flowing into it, pushing it higher than Apple would. So one of the main benefits of a relative strength approach, and this is where I think a lot of the outperformance comes from, and this is the concept that we're pushing with the TI strength, is that when the market is tanking, these relative names don't tank as much. So I grabbed a snapshot here of the pandemic kind of sell-off, and you can see the SPY, the S&P 500, just falling off a cliff, whereas stocks like Zoom, Peloton, and Netflix were holding on. Now, some people may say, well, that's because of the fundamental story and what they do, and they'd be correct, but how to spot it is a different thing. We could simply take a look at it and say, well, as this thing is selling from March until April, Zoom's holding on strong. So as opposed to having to look at the study and study the different names and why they react the way they do, you can simply take a look at these relative charts versus each other. And here's a section where the market is rallying. Again, the S&P 500 being a basket of 500 names. You can then go and say, hey, well, I'm going to focus more on the ones that are really outperforming. So Tesla here obviously has been outperforming the S&P 500 for the past year or so. So that's one thing. So if you take nothing else from what we're talking about today, that's one great concept of just, I'm going to go where the money is flowing into, and I'm going to just focus on those particular names itself. But if you just ran a simple study that said, hey, I'm just going to buy the stuff that's up the most over X period of time, again, Tyler showed you that in and of itself is a system that makes sense. But we want to go a little deeper than that, because as we know, if something runs too far and too fast, it can, maybe pull back or give a little bit of correction before it goes. So we want to try to improve these results to hopefully smooth out an equity curve and to make trading just a little bit more fun. Those pullbacks are certainly not fun. So what we've done when we were building this relative strength model is I looked at, and I'll talk about in a bit, the teachings that I got from the CMT in order to help me build this. But we started to add studies to a relative strength model, looking for things that were strong, but then also saying, I want to make sure that XYZ is not occurring. For example, Peloton, all throughout this chart, is performing very well versus the SPY. But you can see when we're outside of the Bollinger Bands after this big long run, that wouldn't have been the best time to initiate a transaction. So just little things that we can do to help try to increase performance. The same thing with chart patterns. A concept of HTGC, which is one of the stocks that we actually gave to the TI Strength members. You can see the performance of it, the kind of 45-degree angle up. However, we're trying to figure out when the best time is to participate in these trends. So step one is identifying these trends. And then step two is making sure that we're participating at the right time. Also that we can use these metrics to make sure we're limiting our risk. So here's how we created our model. So it was CMT, I believe, and Tyler, I'm sure will correct me, CMT level 2, where they talk most about Ned Davis and his Fab 5 ranking system. So I'm not going to go over all of that now. It's aside from what we're doing, but the philosophy was there, and it was a systematic approach in which he was able to go through and say, I am able to look at these 5 factors and then use a weight of the evidence approach with these 5 factors in order to make a decision when to participate and when not to participate in the market. And then we grabbed that and we did a pure technical stock ranking system. For example, at Trade Ideas, we've got a lot of great traders, Sean being one of them, people who have been in the market for ages, who trade the market every single day, who watch things. They all have their own different approach. So while I was building this, using the concept of relative strength that I talked about, we grabbed from our own little Trade Ideas community different indicators, candlestick patterns, chart patterns that they believed were inducive of strength, right? So step 1, take things that are stronger than the rest of the market. Step 2, apply these different indicators and chart patterns and candlestick patterns to make sure that we're focused on exactly what we consider strong based off of all of these different ranking systems. And then we gave a weight to them. So some simple examples would be, as Tyler showed with that one chart of the 50 period moving average and the 200 period moving average. We would say something like, if the 50 period if the 50 period is over the 200 period and both are sloping upwards, well, we'll give this stock 10 points. And if it's put in a bunch of hammer candles recently, which is something that we also think is a sign of strength, we may give it another 10 points. And then we rank these stocks by these weights, and this is every stock in the market, and then provide to our clients the top 5 of those. And this is just the performance of this versus the market going back 2017 to date. Using something else that I learned in the CMT, there's a lot of focus on making sure that you're back testing and that the way you're testing and the way you're modeling systems is kind of truthful and honest, to make sure that whenever you employ something, you employ it correctly, and that you haven't just created something that in theory works on paper but doesn't actually translate to the real world. So if there's some other CMTs out there, I use the walked forward testing the way they mentioned. I made sure not to optimize. I built a system and I tested it for a period of time, and then I walked forward that test to date. And then we did forward testing, which is just testing in real time for about a year after that to make sure that it was holding up in the real market on top of that. Again, all great things that you can learn with the CMT for sure. So here's just some examples that I'll get into. I have 2, and then we'll kind of, I guess, open it back up to a little bit of just more discussion. But one is CYH, which if you guys look at your charts right now, is way better than even when I took this picture yesterday afternoon. So what you get in the email is this on the left that has my philosophy, like what I see when I look at the chart. I draw some lines for you guys of support and resistance, show you where those next levels are, and then you get a bit of understanding of what the industry it's in. Again, analysis of sectors and industries are very important. And again, this is, I think we're over 15 on this one now, but you can see the drawing as it was sent to you, and then this is kind of what occurred after that. That's one. And of course, they will not all be like this. We're looking at the ones that are looking the coolest right now. This one is a combination of technical, and then I actually put in a little bit of a fundamental aspect here, talking about short squeezes. But this one, again, is another concept. You can see that going into when it was alerted to you, it was not only a relatively strong stock, but a relatively strong stock putting in this formation, something that we look at. Again, the CMT, they actually go and they break down the statistics behind all of these. So you can see how many times they revisit the entry price. You can see how many times they break out moves, success rates of patterns, that type of thing. And then that was actually, you have to zoom in to see it, but that was actually on this candle right here. And then chop sideways for a little bit and then off to the races.
We're back.
Well done, Michael. Hey,
did
we
it.
had a couple of questions coming for you, Mike.
Yep.
One was from, apologize if I'm butchering the name, Nippon. He wrote, so relative strength is acting as a filter and price action is used for entry. Is that correct?
Both are actually used as a filter. So the core concept of this is that we always want to be looking at where the money is flowing into. And so the example of Zoom during the pandemic crash, I think, is a perfect one. You know, everybody was dumping everything except Zoom, Peloton, Netflix, you know, all the names that we know. So the main core concept is looking for the things that are outperforming not just the market, but outperforming every other stock in the market. And that's one of the main benefits that Trade Ideas has is we have massive server tech that can crunch all this math. But then with the price action and everything, that is into it. So if you look at it as I'm going to take the world of everything that's relatively strong compared to the market, and I'm going to narrow that down by things that, for example, are not overbought based off of your typical oscillators, RSIs, and things, and Bollinger Bands, things like this. I'm also going to make sure that they're forming some sort of technical pattern, have broken out of some sort of technical pattern that makes sense as well. So it's all part of the filtering mechanism. And what we've really done is, again, of all of the relatively strong stocks, we've given a lot of value to things that have just cleared or just broken out of some sort of technical pattern.
Awesome. And on that topic of relative strength, we had another question come in from Matt. He just wanted to know what your thoughts are on relative strength versus the SPX, like you described, versus relative strength versus the rest of the individual stocks, something like an IBD relative strength rating.
It's probably going to be the same in a lot of cases, and I
would think so. Yeah.
You know, because the S&P 500 is going to incorporate a lot of stocks. So one thing we're seeing in the market right now is the S&P 500 keeps making all-time highs, and we're hearing a lot of people saying, well, my portfolio is not making all-time highs, and that's generally because you're invested in growth names that we know are underperforming right now. So the ability to say, you know, the S&P, I guess the long and short of it is just a collection of 500 stocks. So if you're outperforming the S&P, you're probably outperforming those 500 stocks. You're better to go on a stock by stock basis, but that takes a lot of math and server tech and that type of thing.
If I could add just a couple comments to that as well. So a lot of the sell side research analysts are going to take a top down approach. Or if you read anybody's macro research, they're using a lot of the writings of John Murphy to understand what's happening between asset classes, or they're looking at intermarket relationships. So if you think about your entire universe of all investable securities and you start measuring them against a benchmark. So let's just start by asset class. Are commodities, US treasuries, US equities, or cryptos, or just holding US dollar cash? What's performing the best out of those asset classes? You come to the conclusion that commodities and equities and cryptocurrencies are doing the best, right? We don't want to be buying US treasuries. We don't just want to be all cash. And I'm talking about this period post-COVID collapse, right? Starting from April last year. Now, if you just take the equity basket, you could start looking at each of the sectors to the whole index and compare what sectors are outperforming the S&P, what's driving things higher. So when Mike was talking about growth names, the stay-at-home trade from last summer and last fall, you saw a lot of growth technology communications companies outperforming the S&P as a whole. Even as the S&P was making all-time highs on a relative basis, these were moving higher faster than the index as a whole. Well, that rotation, the concept of investors putting their money to work in different sectors of the economy, really took root, and I think challenged a lot of folks through the end of the first quarter and into where we are right now, where you saw banks, energy stocks, a lot more cyclical and value sectors of the index starting to outperform on a relative basis. And I think one of the words of caution that we would both say is just because something starts to the relative strength relationship starts to change. Doesn't mean it's an automatic sell, right? So just like if all you've got is a hammer, the whole world is a nail. You don't want to be making all of your trading decisions just off of a relative strength comparison. It's a very helpful comparison to find out, if we're going to go fishing, let's go fish where the fish are. What's trending and outperforming the market? That's where we want to be positioned. But it doesn't mean that just when those relative ratios change, you want to exit completely. I saw just today some gold bugs and even Bloomberg News commenting on the fact that gold on a relative basis to Bitcoin was starting to turn up, right? That could be a short-term thing. It doesn't mean that this is the end of all digital currencies, and it doesn't mean that we should be flocking to gold, which has been an underperformer since the end of the collapse last spring. So the tool is very powerful, but just like a doctor with a scalpel, you want to make sure that that doctor knows what they're doing. So relative strength is a really important comparative tool in the technical toolkit.
Yeah, and just on a simple stock base, and this is why we had to include, all of these metrics and oscillators and all of them, because in theory, some of these crazy stocks that you see that go from $1 to like $30 overnight and then right back down, when they went from $1 to $30, if you just ranked all stocks by which are performing better, those crazy ones are performing better. But I'm not going to buy something. I'm sure I could grab a name out of the hat right now. The trade du jour, that thing that just rocketed, a 1,000-fold. Well, technically it's performing better than everything else, but that's not where you want to go. So you need to focus on some way to filter those out so that you're performing, or you're looking at the things that are performing the best over time, as opposed to in these kind of short bursts as they pop into favor.
Hey guys, let me jump in here just for a second. I know Tyler's got some more stuff he wants to share. Let's just take care of some business real quick. If there's any more questions, please type them into the questions panel and we'll do our best to answer them. Also, Tyler and Michael, let's start with you, Tyler. I'm sure people want to know where they can find out more about the CMT. So if you have a link that you want to share in the chat panel, please do. And Michael, if you want to share a link for people to learn more about the TI Strength, do that as well. For Trade Ideas subscribers, if you already subscribe to Trade Ideas, you get access to the TI Strength. It's right there in your channel bar. Look for the Strength Alerts channel bar. You'll have full access to the Strength Alerts offering. But if you are not a Trade Ideas subscriber, you can just subscribe to the TI Strength as a standalone product, real cheap. That link there that Michael shared will get you real started. So sorry about that interruption, guys. Tyler, let's get back to you, buddy.
I think Michael had something to say first.
Oh, when you said real cheap, I just think I always forget that we bury the lead on this. The TI Strength are $17 a month. So it's real cheap. So if you're interested in all and giving it a shot, then, now's the time. It's like $17. So I spend more on fancy coffees weekly than that.
Where would we be without our fancy coffees? I mean, I would not recommend for anybody to give up fancy coffee.
It's one of the most important trading resources is caffeine, for sure.
That's right. That's right. I think what you have built, Michael, is really exceptional. And the fact is that computing a comparison across so many securities, right? Like that is the labor intensive part of the TI Strength Index. And so getting a subscription to that and having somebody that can compute all of that for you to give you those leadership names, then your trading discipline, it's infinitely easier to chop down the forest with a sharp axe than to go at it with something a little more blunt. So I know we had a couple of folks who are candidates in the program. Nice to see you as well here on the webinar. But for those of you who are thinking about your own career and process, how your trading has been evolving, the things that you'd like to do with this long term, the CMT program is really there for a guided course of study, but also for industry recognition, so that for every meeting you take, every phone call, every email you send, when that CMT is after your name, people know that you've got a real serious approach to risk management and alpha capture, put in the work, and that you have some mastery over this body of knowledge. So real quick, 3 levels of exam, and I know we're running out of time here. You got to do them in sequence, so only one at a time. The next chance to sit for the exams is actually June 3rd, right around the corner. If you've already been studying, I encourage you to get your date locked in right now and make sure your registration is complete and your exam is scheduled. If not, like I said, we do it twice a year, June and December. You're going to study a pretty serious curriculum. And as Michael said, it's, a serious investment of your nights and weekends for a couple of years. Statistically, a lot of people don't pass all 3 on their first try. That's okay. Don't get so worked up about a pass fail on the exam. The reason that people are coming to the CMT program, as we've talked about, even people who are veterans in money management are coming because they know that they can improve their process. They can expand the tools that they're looking for. The stuff that maybe you would not have picked up that book on Amazon, but it's, chapter is included in the CMT curriculum, and it just inspires more further investigation, more improvement to your process, and adding a few more arrows to the quiver, so to speak. But the real reason people come through the CMT program is because it gives them career opportunities, gives them promotions, increases their salary and their bonuses. And the one that I want to draw your attention to is just this, 60% of our survey respondents in the year after getting their CMT charter, that's what all this data is based off of, year after getting their CMT, they had more responsibility. And I want to translate that into assets under management. So their firm or additional clients came in and said, please manage my money for me, because I trust that you've got the right tools, process, and the mastery of this body of knowledge. I trust that you're going to do well for me, for the firm. And that to us really just screams that what the value of the program is, that it has a lot of notoriety and a lot of trust in the professional space. So it's open to anybody. You could, go ahead, Michael.
Well, I was just going to say, just looking at this chart, so I officially only got my CMT, and I was already employed when I got it, but I officially got it in February or so, and all of those things on that iceberg chart have already occurred. So just so you know, it's not just an abstract. There's an example for you as well. So
Michael is a shining example of the benefits of going through this process.
Yeah. Oh, I appreciate you. I appreciate you saying that. I'm glad that's been your experience, and certainly for everybody on the line, it doesn't mean you already have to be a professional to sit for the exams. The whole program is designed for current or aspiring professionals. That could be folks who are delivering advice, recommendations through newsletters, websites, blogs, or as a financial planner for any firm that's out there, or as a coder and strategy developer, you name it. The diverse paths are very, very, the career paths are very, very diverse. And that brings us to our little pie chart. We've got folks all over the world in 137 countries that fill every role, from sovereign wealth fund portfolio managers moving in periods of a decade or more, very large pools of capital, all the way down to high frequency market making shops. And I won't name all the names, but you know them well, and maybe some of you got squeezed out of your positions by them.
Hey guys, we do have a few more questions here I want to make sure we tackle real quick. Matt and Jigar, we'll get to yours next, but here's 2 quick ones. Barry wants to know, if he started today, is there enough time to qualify for the December exams?
Absolutely.
Oh yeah.
We recommend about 100 hours of study per level, but if you're a professional in the field, you've probably got a serious leg up. First level of the exam is multiple choice, 2 hours, 120 questions, really quite approachable. I would not delay in getting started, and that'll just put you on the path to having your CMT before you know it.
Fantastic. Brandon asks, is there a benefit of pursuing the CMT knowledge base and certifications if I am not an employee of the financial community?
Yes. I think without a doubt, improving your process and your investment decision making has immediate benefit to your own P&L on your trading account. But also, I think I've found in my life that you want to leave as many doors open as possible. And so having a professional qualification, getting through all 3 levels of the exam, even if you don't meet the professional requirement right now, couple of years from now, you might want to take a job at a broker dealer or at a software company, or you name it. And that CMT credentialing process, for them to know that you've completed your exams, is a big deal. And then you earn the charter. And I think there's tremendous value for everybody who wants to pursue this.
Tyler, I love the beautiful symmetry of you talking about doors opening for you, and just over Michael's shoulder, the door opened behind him. That was perfect. I mean, it's almost like we planned that.
Yeah, actually, hold on. I got to let her back out. She can open the door this way, but she can't open the door to get back out.
This is not scripted, folks. I promise you, this was not scripted. We have 2 more questions left, and these are more technical for Michael. Michael, the last, here, he's got to put his headphones back on.
Yep.
Michael, the last 2 questions here are for you. They're talking about relative strength again.
Okay.
Matt wants to know, what time frame do you look at for relative strength? Are you looking at the 1 year, 6 months, or something shorter?
So the system we built is the portfolio and everything is basically based off a weekly type rotation, but the short answer to that, I'd say it's whatever your time frame is. So if you're a day trader and you're looking to day trade in the retail sector because there was retail news that day, I would go to whatever the strongest retail name was that day. If you're a very long-term investor, if you're someone, I don't know, you're interested in electric vehicles over the next 10 years, you may want to look at what is the strongest one right now on a weekly time frame. But for our sweet point that we built in that kind of week for back testing, but we're actually finding holding for a month or so makes sense. We're looking at, a daily chart over a year. So the 200 period moving average, for example, is about a year, give or take, of trading. So things like that for our time frame. But yeah, whatever your time frame is, that's what I would focus on. If you're a scalper, maybe you have a couple charts up and you're scalping whatever's the strongest at that time.
Great. Michael, last question, and it's from Jaigar. I hope I'm pronouncing his name right. Now, this won't really apply for the TI strength because we have a system where we just exit the trades the following Monday. But he asks, while following a relative strength system, what is a good trailing stop loss mechanism?
Well, for me, my trailing stop loss mechanisms are simple. Everything I do in trading is simple. I kind of think it should be. So I would pick a moving average or a trend line or something that basically Tyler showed in one of that slide before, where it had the 50 period moving average. If that's your time frame, I would grab a moving average like that. If you're a shorter term trader and you want to be in and out in a week or so, maybe you grab a 10 period or something like that, and just use that as your guide. Because what you'll find is exiting's, I think, the hardest part of the game, right? That's the biggest problem for most traders. But if you just pick something that's relatively close to your time frame and just say, I'm going to wait for a close below this moving average. Sometimes, for example, we have a couple that are still in from a month or so ago and riding up. So it helps with that that quadrant that you were talking about, Tyler, with the big win and the small win and the small loss and the big loss. It allows that big win to occur every now and then if you just pick something that makes sense to your time frame and just let it go behind that.
Excellent. And one last question snuck in real quick from Ram Ravi. He wants to know, is there a place where CMT candidates can look at sample questions for level 1?
Absolutely. I just dropped it in the Q&A box, but right from the website, if you're at cmtassociation.org, you'll be seeing all of the information for all 3 levels. And under each level, we've identified specific learning objectives, what you are going to be studying, and then some sample questions for what you're going to see on the exam. Gives you an idea of what you need to prepare for. And again, it's a consolidated curriculum that you're going to study from. So everything you need to pass the exam is in a single book. We used to prescribe a library of materials, and you read a few chapters out of each. We've tried to make the study process really clean, really efficient, and in fact shorter for candidates in the program.
Well, guys, we hit 1 hour right on the button. Well done. I'm very impressed with our timeliness here. Tyler,
Great. Yeah.
Tyler, thanks so much for joining Mike and I to talk about the CMT. I know I hate to speak for Michael, but I know Michael got a lot of value out of this, and and Trade Ideas as a company is certainly getting value out of what he's learned with you guys. So thanks so much, and your presentation was fantastic, by the way. And hey, you're also pretty handsome too. So
Hey.
makes all the
I'll need that recorded and in writing. I'm gonna
Yeah.
send that to folks.
That's your ringtone now.
I regret that my camera didn't work. I was really hoping the three of us could compare our beards, but it just didn't work out.
Next
Beard
time,
envy.
my friend. Next time we shall we'll have a beard contest. I think Mike's winning right now.
Oh,
I
maybe.
want that.
We'll see. Next time we meet up, we have till then to compete.
All right.
Absolutely.
All right, guys. Thank you so much. Thank you for everyone who attended, and we will make this available on YouTube. You emailed us, or we have your email, so you'll get an email follow-up with this info as well. Thank you so much, guys, and everybody have a great weekend and trade well.